Hi, everybody. Welcome back to Ox Talks. It is Wednesday, January 31st, 2024, final day of January. Hope you're having a productive day today and a great week. A lot to talk about today. Before I start, as always, thank you for watching the videos, taking what I know is valuable and precious time in busy schedules to watch. Please subscribe to the channel if you haven't already done so. Please continue to hit the like button for me. I do track that. I like to see that. And please hit the bell notification so we can continue to spread the word, wake up the algos, and build this community. Please share the videos with your family and friends, colleagues, co-workers, anybody that you care about that needs to hear these messages. And you probably know who they are. So please share the videos. Plaster it across your social media and any other outlets that you can think of so we can keep waking people up. A lot happening today. I will jump right into it. You know, I really enjoy taking this time every afternoon here at the office to kind of shut down the phones, turn off the computer and just focus on taking in some of the stuff from the day. I'm constantly monitoring the markets throughout the day and news events, different sources. But it's just nice to be able to bring it all together with a few key points, the takeaways I get each afternoon, and sit here and just talk with all of you and discuss. So with that being said, the Federal Reserve came out today. There was some pre-published comments relative to the rate situation. Then there was a press conference. I did not get a chance to see the press conference, but the stock markets sold off pretty broadly today. The Dow, the S&P, and the NASDAQ were all down. The NASDAQ was down, I think, about 2.5%. So markets got creamed today. And my takeaway was this. Yes, they didn't change the rates today. There was nothing, no one expected that to happen. But what came out in the press conference after today was that Powell said that they are likely not looking to make any cuts at the March meeting, and the markets have been pricing in rate cuts at the March meeting. That's pretty much now off the table for all purposes. Stocks didn't like that. And, you know, we've been talking about this a lot on the channel, that the narrative has been, oh, rates are coming down, don't worry, buy a house, buy a car, rates are going to be reversing and you can refinance all of this stuff. Well, guess what? We just got word today that that is certainly being pushed off till later in the year. It wouldn't happen till at least the May meeting, and I would venture to say it won't even happen then. So that is what happened today with the Fed. And interestingly enough, I did see a portion of a Zero Hedge article that said in the Fed statement there were certain words and sections that were removed. And one of the sections or sentences that was removed is, quote, "The U.S. banking system is sound and resilient." That is something the Fed had in their last statement. It was not found in this statement this time. You can, obviously interpret that it was taken out because the banking sector is so strong that it didn't need to be there anymore. Or you could interpret it exactly the opposite, as I do, that the Fed no longer believes that the banking system is sound and resilient. And on the heels of that statement, and what was also unfolding today was the utter collapse of another regional bank in New York. And this was New York Community Bank Corp. And this morning, early on this morning, I saw something on that, pulled up the stock, and the stock was down substantially. And I didn't know what the news was. I've now found the article, or an article from Financial Times, which discusses what's going on with New York Community Bank Corp. It says it plunged on Wednesday after the lender that bought failed Signature Bank in the middle of last year's regional banking turmoil cut its dividend to boost its capital and reported surprise loss. So the New York Community Bank Corp purchased Signature Bank, one of the banks that went down mid last year, and they took, whatever portion of those assets, if you want to call them, onto their books. It says NYCB NYCB had been seen as one of the winners of the 2023 crisis that sank Signature Silicon Valley Bank and First Republic. The suburban New York-based institution last March acquired most of Signature's deposits and just over a third of its assets, including nearly $13 billion in loans, in a deal arranged by the Federal Deposit Insurance Corporation. Those gains were completely erased, it says today, after NYCB reported its fourth quarter results on Wednesday. The regional bank lost $260 million in the final 3 months of 2023, down from a gain of $164 million in the same quarter the year before. The bank blamed in particular a rise in expected loan losses, many of which emanated from loans tied to office building, bank executives said. So here we go. We're coming full circle. These office building loans are dragging down the bank's balance sheets, and it's going to continue to worsen. It says NYCB shares closed down 38% today, having earlier dropped as much as 46%. Stocks of other smaller banks also fell, with the KBW Regional Bank Index declining 6%. So this regional bank stock closed down 38%. I saw after hours that's up about 3%, but it's down 35% in a 24-hour period. That is an astonishing loss of the value of that company in 24 hours. It says the bank maintains that despite the longer than expected integration period, the acquisition is going well. Okay, how's that working out for you? You just lost a third of the share value of your company in one day. Let's see if it bounces back tomorrow. But more importantly, let's see if this is a contagion that starts to spread again throughout the regional banks. All these regional banks are many of them are carrying these bad loans on their books. And there's a lot of skeletons in these closets, folks. I believe in the banking sector that's going to start to now rear its ugly head again. So is it coincidental that Powell, in evidently a pre-prepared statement, removed the words, "The U.S. banking system is sound and resilient"? I hardly think so. Next article today that I want to discuss out of Fox Business this morning talks about private sector job growth. And we've talked about the layoffs almost every day. This article is entitled "Private Sector Job Growth Cools Sharply in January to 107,000, Worse than Expected, According to ADP." It says hiring by U.S. companies slowed more than expected in January, a possible sign that the labor market is finally slowing in the face of higher interest rates, according to the ADP National Employment Report released Wednesday morning. We talk about the fact that there is a lag effect on this incredible rate hiking cycle that the Fed has been on. And a lot of very, very, very well-known economists and successful billionaire business people saying, look, there's not going to be a soft landing. We haven't even felt the repercussions yet, the lag effect from that rate hiking cycle. And I think we're starting to see that now backfill into this economy. It says companies added 107,000 jobs last month, missing 145,000 gain that economists surveyed by Remunerative predicted. It says, in a welcoming sign for the Fed, wage growth continued to shrink in January. Again, the Fed wants you to not have a job. The Fed wants you to make less money. They're trying to cool off this hot economy is what the game plan is. So the annual pay rose 5.2% last month, according to the report. For workers who switched jobs, wages climbed 7.2%, the smallest annual gain since May of 2021. And we know that these wages are not keeping up with the pace of inflation. The job growth slowdown hit nearly every sector last month. The leisure and hospitality industry accounted for the most gains in January, adding just 28,000 new employees. Trade, transportation, and utility added 23,000, while employment in construction rose by 22,000. Just one sector shed jobs last month. That was information, with a decline of 9,000. It says the data precedes the release of the more closely watched January jobs report from the Labor Department, which are going to be released on this Friday morning. It's expected to show that employers hired 180,000 workers, following a gain of 216,000 in December. I wouldn't be surprised if that $216,000 number is substantially revised downward when we see this report come out Friday morning. It says the unemployment rate is expected to inch higher to 3.8%. So unemployment's going up. Job creation is going down. Layoffs are going up. Interest rates are not going down. The stock market is going down. Let's see how this plays out in the next few days. It only takes a day or two for the markets to kind of figure out where they're heading. But my take is that the markets have had this wrong from the beginning, that the Fed was never going to immediately reverse course. If you look back at history, I believe that the Fed only usually enters into a rate cutting cycle when things are already, massively collapsing. So are they waiting for that trigger point before they do something? I don't know. These cards are on the table now. Let's see what happens. The last article I want to share with you today was a follow-up, something I saw this morning I wanted to address. I did a video on December the 11th where I talked about in Southern California, in Beverly Hills, there was a raid on a private vault many, many years ago, and how the FBI came in under this warrant and seized not only the purported perpetrators' deposit boxes, but basically they seized everybody's boxes that were located in that facility. They ransacked through the stuff. They took out, private papers and cash and gold and silver, jewelry items. And, there were lots of people that didn't ever get their stuff back. So lawsuits were filed. And at that point in time, the lower court, the state court, had sided with the FBI and said that they could hold these private asset forfeiture sales and that they were within their bounds to do that. Well, here's this article today. It says the FBI violated private citizens' constitutional rights when it seized contents from hundreds of safe deposit boxes during a 2021 raid on a Beverly Hills business suspected of money laundering, a federal appeals court ruled last week. So now the appellate court has spoken. They have basically reversed the state court's position on this. It says the U.S. Ninth Circuit Court of Appeals found the Bureau violated U.S. private vaults box holders' Fourth Amendment rights against unreasonable searches and seizures by opening and cataloging the contents of 1,400 safe deposit boxes without individual criminal warrants for each. It says the January 23rd ruling reversed a 2022 lower court decision siding with the FBI, and it requires the federal officials to destroy any inventory records of the hundreds of box holders not charged with a crime, because they took records, they took trusts and private financial documents as well. It says agents took about $86 million in cash from the boxes in the March 2021 raid, as well as a trove of jewelry, gold bars, and coins, silver, and other valuables. In May of that year, the FBI commenced administrative forfeiture proceedings against an unspecified number of the boxes, according to court documents filed by the government. It says the government argued before the Ninth Circuit in this recent round of litigation that its warrant authorized the FBI to seize the deposit boxes and inventory their contents in accordance with standardized policy. But unsealed court documents show that neither the FBI nor the U.S. Attorney's Office told the judge in their warrant request that agents planned to confiscate the contents of every box containing at least $5,000 in cash or belongings. So in the decision, the Ninth Circuit panel wrote that the government had gone beyond the scope of its warrant and violated its own rules by taking inventory of property that wasn't the subject of a warrant. This was Circuit Judge Milan D. Smith, or Milan D. Smith Jr., wrote, "It was particularly troubling that the government couldn't explain the limitations to these types of inventory searches and questioned how they differed from the limitless searches of an individual's personal belongings, like those seen in colonial America. It was those very abuses of power, after all, that led to adoption of the Fourth Amendment in the first place, Justice Smith wrote in this opinion. So kudos to the Ninth Circuit. It's good to see when the legal system does, from my perspective, actually work. Being an attorney for 3 decades now, oftentimes it does not work. So with that being said, it's about 15 minutes in length. Again, thank you all for being here. I appreciate all of you, appreciate the comments, the interaction. I'm leaving here in about an hour and a half to go get a 1-hour shoulder workout in today, get some cardio in. I already have a little bit of walking in today, getting my steps done. Hope all of you are going to do the same today. Please get your steps in. Just move, get some walking in. Strength training we talk about all the time. You don't need a fancy gym membership and fancy gym equipment to do this. You can do push-ups wherever you're at. You can do sit-ups. You can start with a few reps and work your way up. The diet, again, crucial. Calories in and calories out. You cannot get fit. You cannot lose weight. And you will not see any measurable results. It's a positive results unless you have the diet working in connection with your exercise regimen. That being said, I look forward to speaking again with all of you tomorrow. Have a great evening. Bye.